Thanks, Paul, for the introduction, and appreciate all your time today. Also, an appreciation to the organizers of the Diggers and Dealers Conference for hosting such a great industry event. Note that we will be making forward-looking statements in this presentation. So there's a couple topics we wanted to talk about today. The first is going to be on the macro environment and the gold price. We'll talk about Agnico Eagle's regional operating platforms, some of our recent results, and our presence in Australia. But before I started, I wanted to recognize that on behalf of Agnico Eagle, our Fosterville operation is located in Dja Dja Wurrung country in the state of Victoria, and we pay our respects to the traditional owners of the land, their leaders past, present, and future. So let's start this conversation with an update on the gold price and where we are in the cycle. At Agnico Eagle, we are constructive on the fundamentals of gold long term. The graphic on the left depicts 50 years of where we've been, where we are, and factors influencing where we may be going. The media headlines you see every day: unsustainable fiscal deficits, historic levels of government spending, the rise of geopolitical tensions, the East and the West reemerging, the onset of inflation, and we see volatility every day in the financial markets, in equity valuations and fixed income. We've seen strong physical demand taking metal off market, and we continue to see gold purchases by central banks. And these elements are culminating in a renewed appreciation by investors for the value of gold, its place as a time-tested store of value, and the importance of gold as an asset class in uncertain times. So how has Agnico positioned itself over these cycles, and how are we positioned today to benefit from this environment? At Agnico Eagle, we're building a stable, high-quality business that's easy to understand and positioned to create value for our owners. One of our prior CFOs used to say, we're the sleep easy at night gold stock. And we do this strategically by focusing on two criteria. The first criteria is geologic potential. We want to be in places where it has the geologic potential to operate multiple mines for multiple decades. And the second criteria is political stability. The political stability to operate multiple mines over multiple decades. With this approach, we've generated a leading pipeline of projects over many years, and we provide investors with exposure to a high-quality business, strong capital discipline, and investments based on our regional knowledge and technical capabilities. We're focused on delivering strong financial returns, and we focus on per-share metrics. So on the right-hand side of the slide, you see our platforms today. We're the third largest gold producer by output and the second by market capitalization. And we're in 4 regions. In Canada, centered in Quebec and Ontario. We have skills in the Canadian North with 2 operating mines, Meliadine and Meadowbank, and a development stage project called Hope Bay. We are the very proud owners of the Fosterville gold mine right here in Australia. We operate one of the largest gold mines in Northern Europe, Kittilä, and have operations and projects in Mexico. In terms of track record of value creation, our chairman will often remind us it's not what you do, but it's how you do it. And we've had a very consistent track record. We've systematically built a company from very humble beginnings in Cobalt, Ontario, to one of the largest mining companies in Canada. And since 2005, our business has changed. From 1 operating mine, you see in the inset, the LaRonde mine, to now 11 operations. 1 country to 4, and we've grown gold output from 240,000 ounces a year to about 3.5 million ounces a year. But that doesn't really matter to our shareholders. What matters to our shareholders is that we're creating value for them on a per share basis. So how do we rank here? We've grown gold output per share by a factor of 2.5 times, and our dividends have gone up by a factor of 50. On the right, you see our share performance relative to the XAU and the S&P 500. Here, our compound annual growth rate's around 9%, outperforming the XAU and the S&P 500. So our strategy works, and it's continuing to work in this environment. Let's look at some recent results from Agnico Eagle, showing the underlying strength of our business. In the current gold price environment, our teams have been very, very focused on ensuring that the benefit of higher prices goes to the bottom line and accrues to our owners. We generated record financial results for the third consecutive quarter with adjusted EBITDA of $1.2 billion and free cash flow of over $500 million in the second quarter. And one of the key drivers that our company is particularly proud of is our focus on cost control. Our all-in sustaining costs are hundreds of dollars per ounce lower than our peers, and our all-in sustaining cost margin recently increased to 50% this quarter, which is amongst the very best in the industry. Now we'll look at one of our platforms in a little bit more detail. This is the Abitibi Gold Belt. The Abitibi is a prime example of our regional strategy. Get into good regions, focus on geologic potential, and build a competitive advantage. And then leverage those advantages in people, in capital, in experience and relationships with suppliers. And this approach has generated per share value at low risk. Now, to give you some perspectives on the distances here, that blue box is the Cadillac break. From left to right, from Macassa to Goldex, is approximately the same distance from Kalgoorlie to Norseman. And on the north side there, from Detour to Kirkland Lake, that's approximately the distance from Leonora to Kalgoorlie. And so what do we have in this area? We have 5 operating mines, 150,000 tons of daily mill capacity, roughly 2 million ounces of output at very compelling unit costs. We have 2 of the 10 largest gold mines in the world, anchored with Detour and Canadian Malartic, with a robust pipeline and land package, some value drivers here highlighted, which we'll talk about more, the Detour Lake, the Odyssey Underground, and a suite of pipeline projects including Upper Beaver and Wasamac. All in a region where we have a competitive advantage for over 50 years with people, technical expertise, and logistics. Our CEO will often say the 3 best places to mine in the world are Canada, Australia, and Nevada. And we are very proud to have operations in 2 of these countries. Let's take a closer look at one of our assets. This is Detour Lake. We've had incredibly strong progress here through optimization and exploration. Now, this was an underground asset operated by Placer Dome in the 80s and 90s. And today, these many years later, Detour is the largest gold mine in Canada with 20 million ounces of reserves and a mine life to 2052. This past quarter, it was a pleasure for our company to host analysts and investors to site, where we showed a pathway to 1 million ounces of production with strong incremental economics. Detour Lake is in a very rare category of assets with this type of output, resource potential, and mine life, and is a great illustration in our industry that some of the very best risk-adjusted returns come from brownfields expansions where you can leverage your resources and technical know-how over existing infrastructure. Now let's look at Canadian Malartic and Odyssey. Agnico first acquired 50% of this complex in 2014 jointly with another gold producer. And we consolidated our interest in this asset in 2023. We now own 100% of Canadian Malartic and Odyssey. This is another open pit transitioning to an underground. And in fact, mining started here over 100 years ago with the Goldie brothers. Very similar to what we see in Western Australia, where mining, as an example on the Golden Mile, has been taking place for over 100 years. Today, Canadian Malartic is Canada's second largest gold mine, and Odyssey will have a mine life to 2042 with strong incremental expansion economics and planned output of approximately 500,000 ounces per year. Another demonstration of the strength of our business model, expandability of our assets, and commitment to the drill bit. In Agnico Eagle's experience, some of the very best results happen at depth, and this is planned to be a great asset for Agnico Eagle for many decades to come. Now let's look at our fill-the-mill strategy. Another key asset that we have, as mines go through various phases of open pit and underground, is the Canadian Malartic complex will have about 40,000 ounces of excess capacity starting in 2028 when open pit operations cease. We call this our fill-the-mill strategy, and we continue to work on it. Potential sources of ore feed include an expansion of East Goldie and the potential for a second shaft. If you had the potential to listen to our last quarter, our head of global exploration talked about the concept of a second shaft. We don't know where, but it's something that we're thinking about. There is additionally satellite potential within the Canadian Malartic property itself, regional development stage assets like Wasamac, and the potential for toll milling for Agnico Eagle to be a processing partner of choice in the region. Moving our focus to Australia, since 2022, the Fosterville Gold Mine has been one of the highest grade, lowest cost producers in Agnico Eagle's portfolio. And Fosterville has generated superior returns for Agnico Eagle and our owners. We also own key assets in the Northern Territories, which, while in care and maintenance, we continue to study for their long-term potential. Taking a closer look at Fosterville, the Fosterville story in the Swan Zone is a story of drilling, it's a story of perseverance, and it's a story of optimization over many years and many operators. Our exploration is currently focused on extensions to the Lower Phoenix and Robbins Hill, and our teams are working very hard to see plans that could see 175 to 200,000 ounces per year through optimization and study. Today we have 7 underground drill rigs focused on 3 areas in Fosterville. The first is extensions to the Lower Phoenix Zone, which hosts Swan and Signet. The second is better defining the high-grade structure in the hanging wall to Swan, which we call Cardinal. And the third is testing other key structures at Robbins Hill. And in the next slides, what we'll visually show is the benefits of keeping the drill bit turning. So in the next 2 slides, with the help of the Fosterville team, we're going to take you through what this asset looked like in 2012 and what it looks like today. So the image that you see on screen is a simple grade interpolation based on the drill hole database. Results between 3 and 5 grams per ton are shown in blue. Results greater than 5 are shown in green. And for context here, we've shown just to the left there, the placement of what would become Swan. So in 2012, there was no knowledge of the 2.5 million ounce Swan ore body, which averaged 40 grams per ton, sitting down plunge of Phoenix. Robbins Hill was just a surface expression, with little exploration and almost all drilling done from surface. The operational focus, by necessity, was on the Central, Phoenix, and Harrier. A decade later, With 1.2 million ounces of drilling, mostly from underground, the picture has changed dramatically. The Swan Zone was discovered and is currently being mined. Reserves grew from 200,000 ounces to 1.7 after depletion of 3.7 million ounces of gold mined. There was a large investment in Robbins Hill decline as an exploration platform to support future production potential. Today, gold mineralization is now known to 2 kilometers depth, and the strike extent between Phoenix and Robbins Hill is being infilled and better understood. We continue to develop the geologic thesis of this asset with many compelling targets and studies underway by the team. In May 2024, Agnico Eagle and the leaders of the Dja announced the signing of an agreement to develop and maintain a long-term relationship with Agnico Eagle and the Dja based on trust, mutual respect, and collaboration. This was the first type of agreement established in Victoria with an active mining company. The agreement includes measures to increase the Dja's involvement in Fosterville operations, from training and employment to fostering business growth, safeguarding the environment, and financial contributions. For over 60 years, one of the things at Agnico Eagle we are proud of most is the strength has been in fostering meaningful relationships with the communities in which we operate, believing that for mining to work, it must work for all stakeholders and the right holders. As we wrap up, some simple messages to leave you with for Agnico Eagle. Agnico Eagle has a very simple strategy: to go to regions where we see multi-mine, multi-decade potential. We provide shareholders with exposure to a high-quality business, which happens to be a gold mining business. A disciplined approach based on the knowledge of our assets, the technical capabilities of our men and women, and emphasis on per-share metrics. We're well positioned in the regions we have with strong geologic potential and want to continue to build out on our competitive advantages with our unique platforms. It's been a pleasure to address the conference members here at the conference. The Agnico Eagle team, John, Francis, see Wes, Troy here up in the front with Rob and Simon. We're here all week. We're by the very popular coffee machine in the mezzanine, if you want to come by. And we'd love to tell you more about the Agnico Eagle story. So thank you very much for your interest, and have a productive conference.